Treasury Secretary Scott Bessent suggesting overnight that the Fed should be open to cutting rates by 50 basis points at its next meeting in September. For more on rates, inflation, the economy, the latest trade developments, let's bring in Joe Lavorgna, counselor to Treasury Secretary Scott Bessent. When did that happen?
What's that?
So you have an official capacity now. Can you speak freely?
Yes, of course. I always have, Joe.
Kind of, but I don't know if you can speak totally freely. Okay, for example, the 15% export tax on NVIDIA. You're a free market guy, conservative. Doesn't that sort of rub you the wrong way?
President Trump is trying to protect U.S. business and industry. We're in negotiations with China. We'll have to see how things play out, but I don't want to specifically comment on
two specific companies.
One company.
Two specific companies pay 15% of their revenue to the federal government in a specific industry.
This is, Joe, a very complicated issue with trade.
But I understand.
But, so you can't. Okay. I mean, let's be fair. You have to. This is a very specific issue on trade, and there's a lot of national security concerns at play. So,
well, apparently not. If you pay 15%,
there's a lot there to unpack.
Can I just throw one other thing in? Apparently, your boss this morning. I don't know if you just saw this because the headline's just crossing, where Scott Bessent said that the NVIDIA chip export tax could be a model for others, for other industries.
At least it'd be not a single one-off situation then.
So that would be the upside.
That's what I'm saying.
Of it.
Yeah.
The downside version of it was people would say, "My God,
industrial policy.
This is true industrial policy. If we're now saying this is not just a one-off,
I just want to as the Secretary said many times, and this is important. National security is economic security is national security. So I think we need to just step back and take a more holistic, integrated, detailed approach.
If the BLS numbers were rigged, and in fact it wasn't a weak number, then why would Secretary Bessent be saying we need a 50 basis point cut? They're either rigged or they're not.
No, that's not true. So I think the thing is the Secretary and the President want a more rigorous quantitative set of standards for the data. And there's no question that when you have a Six Sigma event in the last month of the revisions, there's concerns about data quality. In the private sector, you talk to many analysts, and they're always sort of circumspect on the payroll data, given the propensity for massive revisions.
I think it's terrible data and antiquated, but I'm just saying I don't think that the BLS commissioner rigged the data to make the president look bad.
Well, I understand that, but
do you think it was rigged?
Well, here's the thing, Joe. If you look at the pattern of revisions, you've had consistent downward revisions for the last couple of 3 years, except for a brief period last fall when you had upward revisions. Then you have a multi-sigma deviation in the last couple of months. People start to question the integrity of the data.
Yeah, but
so
the big 800,000 revision was before the election.
No, but it wasn't, and it got revised up over the following months. No, the data got revised up in October, November. Anyway, the point is we do need good data. The trend in payroll growth has slowed, and this is what is important. This is what the Secretary was alluding to, is that interest rates, by the Fed's own standards, are well above neutral. They're well above even the highest dot on the histogram in terms of rates. And if you look at what's
Jeremy Siegel wants to use Fed funds versus where the 10-year is.
Sensitive sectors of the economy are the weakest, and certainly would warrant lower interest rates.
I was bolstering your point. He wants to use where Fed funds are versus where the 10-year or the 30-year is. We're sharply.
Well, not just that. The market has been saying for 3 years that monetary policy is too tight because the 10-year has been trading below the Fed funds target, the upper end of the target. So I can understand the president's frustration.
Okay. I'm going to go a different direction on you. I want to go back to BLS for just half a second, which is the new, or at least nominated BLS director, says that he is cool with the quarterly figures. He's just not cool with the monthly figures. Now, by the way, that actually makes sense to me, which is to say that, the quarterly numbers hopefully are right because they've had time to catch up. The monthly figures seem to clearly be inaccurate. I don't know if they're politically motivated inaccurate, but that's the point. If the quarterly numbers are cool, and we can, I think, agree that we could maybe modernize the system so we're not getting this sort of crazy lags, but it suggests that the numbers ultimately are not being politically manipulated. Do you agree?
The key point, Andrew, is that people want to have confidence in the numbers, and just the pattern of revisions and the magnitude of revisions makes people, just from a statistical standpoint, wonder about the integrity of the data, whether it's a major mismeasurement issue. And certainly the BLS, I think, historically has been slow in sort of adopting new technologies and techniques to try to better measure the economy. That's something EJ, I think, would be very good at trying to have a more structured approach.
Question. You know, there's a question about the credibility of the numbers because of these delays, which I think is a technology problem, maybe incentive problem, and other things about how it's collected. What you don't want is the numbers to be politicized, polarized, and whatnot. EJ's history is such that he's obviously part of the Heritage Group, Project 2025. So for some people in the country, they're going to look at that and think about it in a sort of political prism, which is something you don't want. But there's another issue, which is the issue of expertise. And maybe we decided that expertise is out the window. But his history is not as somebody who has done polling and research and things of that sort.
No, but EJ, with a PhD in economics, understands statistics. And the data, ultimately, if the data don't get revised as much and they're more accurate and match GDP, that's all the commissioner, that's all EJ would want. So what his background is no bearing on the competency of how good a job
he's not going to be
the numbers
doing that.
will. The numbers will bear that
They
out.
say the commissioner doesn't do anything anyway, just oversees
But that may be the problem, Joe, and that you need somebody to make a real effort and try to get better, better quality data.
There's a lot of pressure for lower rates, obviously, and now we are hearing that the list of potential replacements for Jay Powell is expanding. So
11 people. Leisman just broke some news of the 3 new names.
Exactly. The worry is that the president is a real estate guy and wants lower rates so much that he's going to put someone in that maybe is too dovish. And I made the point that Jimmy Carter, do you think Jimmy Carter liked G. William Miller or did he like Volcker? Volcker turned into the hero demigod of all time because he basically went to 21.5% interest rates and crushed the economy. G. William Miller would have given President Trump everything he wants.
I don't know about that, Joe. But
he's the clown prince.
But back then, you had interest rates or 10-year notes.
Does the president? 15, will the president 20%. Let someone do what needs to be done for inflation?
But we've just established that the market rates
in the future
are below.
Okay, in the future.
But the market's forward-looking, and long-term rates are well below the funds rate.
Right.
And again, by the Fed's own admission, monetary policy is extremely
tight. In the J.D. Vance administration, starting in 29.
But this is a hypothetical several years from now. On what
I was throwing you a bone there, my friend.
No, but my point is that the Fed's models have been broken. The Fed's inflation forecasts have been off. That's just
But you think the president would be okay if someone said, look, I'm worried about inflation for whatever reason, we need to tighten rates. You think he'd be okay with that? He wouldn't fire him?
Yes, absolutely. No, well, the president has said that rates should come down. Right. And if there's a mistake, then the Fed could reverse. And if you look at interest-sensitive parts of the economy, housing, autos, areas of manufacturing, they've been soft. And certainly lower rates would help. And by the way, the president, who was mocked at the time back in 2018 about lower rates, turned out to be exactly correct.
Probably right this time, too.
And the economy grew 3.4%, almost 3.5% in 19, and inflation was low and falling.
But all the pressure maybe caused the Fed to be unable to cut rates. It could have been.
Well, if the Fed, Joe, if the Fed is data dependent.
How could Powell cut at the last meeting with all the pressure from the president?
Because I can tell you why. If you look at the Fed's forecast and headline inflation in March, they forecasted 2.7. It came out at 2.5. In June, they went from 2.7 to 3.0. Headline inflation went from 2.5 to 2.4. Their forecast error actually got wider. And by the way, Governors Waller and Bowman dissented for rate cuts that July.
First time in 50 years or so.
30 years.
I got a complicated
50,
I got a hard one for you. Do you think that Jan Hatzius should be fired from his role at Goldman Sachs? Because that's effectively what the president of the United States, who is your boss, suggested yesterday on Truth Social.
I think he should, because he never comes on this show. He doesn't come on this show.
Executives should be do. That's their own prerogative, so I'll leave it there.
Well, but how do you actually? But here's a separate question, because I think business executives watch our broadcast and they think to themselves, and I think this is probably true of David Solomon, actually. He says to himself, I like some of the president's policies. I don't like some of the other policies. But what I really don't like is the president coming after me personally, telling me I should go be a DJ permanently, or that I should fire my economist. And I think that one of the things that's sort of in that thought process is, you know, if you say you're going to support American business, especially with, you know, foreign countries and other companies that are competing against us, don't go after our own people. What do you think of that? The
president is incredibly non-conventional and highly effective. And people know when he's sort of, you know, trolling and being
this is
funny I think that's about it.
This is crying about the mean tweets 2.0. You're still
all I'm saying is if you are an executive and your name is mentioned in one of these things, you don't think that he's just rousing you.
I wouldn't like
You think it is not a good situation.
But
I mean, that's what it is.
Mean tweet. We're back to mean tweets.
Yeah, I mean, look, the thing, Andrew, I would say is...
By the way, he's giving us a lot to talk about on this broadcast, so Mr. President, thank you.
I don't want to mean Truth Social.
That's my point.
You might get one.
I might get one.
No, I might have gotten one. The president has been so accurate and so visionary on so many things in terms of getting foreign capital to come back, how the tariffs have played out. I mean, he's really been correct time and time again, and you're seeing it. The economy rebounded in the second quarter. Growth in the third quarter looks good. Growth will be even better if rates are aligned with the fundamentals. Inflation's falling. I mean, all these good things that the president has put in place, people need to be mindful of. You're seeing very tight credit spreads. There's low recession risk. So there's a lot of good stuff.
I have to tell you, he's a very good spokesman for this president.
Oh, it's very kind of you.
I think what I said right at the top, he definitely is a different Joe Lavorgna now, and that's okay.